All right, here we go. We're gonna get rocking and rolling, people. It's a beautiful day in Milwaukee. It's April 15th, and yeah, we're gonna get going. So thanks for jumping on this morning's call. A couple things that you can expect from us. I did, as I said to you last week, did a deep dive into Q1 data and insights, what's going on in the market. But what I did is I took a little bit of a different approach this year and looked at a 3-year view of Q1 comps to say, based on 2025 quarter one, how is the market operating versus 24, 23, 22, to give you guys some perspective as to what's going on in the market. I'll finish the conversation with a grocery store market of the moment script, along with some things going on related to compliance, tech marketing, as well as what's going on within our industry and how is everybody performing versus our peers. So let's get into it. Mission, vision, values, beliefs, and perspectives. From a vision standpoint, one of the things I'd share with you guys is to be the real estate company of choice for agents and their customers. And every single day, our leadership teams takes a focus on who do we need to be and what do we need to deliver in order for you to have ultimate success in terms of growing productivity, impacting and growing your influence within the marketplace, impacting and growing your reputations within the marketplace, and how do we serve you in a way in which that shows up for you guys to see continued success. And over the weekend, the Milwaukee Journal-Sentinel publishes the Top Workplaces survey. And the coolest part about the Top Workplaces survey is they survey thousands of employees, independent contractors, and so forth. And they survey the group to say, tell us about what you love about your environments, tell us about what you don't love about your environments. All of it, quite frankly, is anonymous. We don't actually, quite frankly, see the feedback, but we like participating in it to see where we benchmark versus our peers across all industries. And in 2025, we were recognized as not a top workplace. We were recognized as the top workplace in southeastern Wisconsin across all industries, across all employees. And it means a ton to myself and the team is for you guys to recognize us in such a way. It really does. It means a lot. It kind of verifies what it is that we do. And I'm not going to say that we're perfect in every way. And we have lots of things that we're continuously working on from an improvement standpoint to improve the value that you receive from a partnership from us. And how do we impact the environments every day for you guys to see continued success and productivity. But it also is a huge a compliment to the team. In terms of what they do and the value they deliver and how they serve you every day. And for you guys to respond to the surveys in such a way that would recognize us as the top workplace in southeastern Wisconsin. I just took a snapshot of the publication that came out in Sunday's edition of the Journal Sentinel. And you can see, we're up against West Bend Mutual Insurance, Shore West, Muskego Schools, Wisconsin Center District, which is downtown, Quick Trip, which is well known across the industry as having great workplace culture and community, Badger Meter, Husco, Van Horn Automotive. So you can see it's not just like a real estate thing, it's an all industry thing. And we take the Best Workplaces survey very, very seriously from the standpoint of it is a great way for us to take a barometer. What is it that we're doing and how are we serving? And we can't thank you enough and are incredibly grateful for the recognition that you guys gave. A little bit more about the survey results. They survey thousands and thousands of people for this. And then there's a whole algorithm that helps them identify. But the interesting thing for those of you who know the survey, they do a lot of things like double knots make a negative. Double negatives make a positive, and different ways to try and mix up the questioning. And then they look at the data and the feedback to identify this list. And so it is with a great appreciation and deep honor that you guys would recognize us in that way. And we continue, I would say that this is what drives us as a leadership team to serve you guys every single day to ensure that we are inspecting what we expect or what you expect out of the partnership with us. So we thank you for that recognition and deeply honored by it. With that, I'm flipping it over to Vranek. Vranek, what do these guys need to know about team reports in command?
Okay. Get my video on. All right, good morning, everybody. So just a quick update to Command relating to team reports. So in an effort to streamline and pull more resources into Command, Keller Williams has been working on integrating more reports and all of that kind of thing into Command so that you can, not have to log into my KW anymore. Everything is eventually going to be funneled and in Command. So next slide, Charlie. One moment. Gonna work the Zoom here. All right. All right. So reports have really been streamlined for rainmakers. So basically there are 3 reports that are now located in Command in the reports applet. So when you click on that reports applet on the left-hand side, there's now an additional reports tab that you can see. So some of those reports that are now in there, there's the team statistics portal, which is available to rainmakers, as well as team performance detail and team performance rankings, which are available for all team members. So agents who are on a team will have access to these, to the performance detail and then the rankings, and then rainmakers will obviously have access to all 3 of those reports. So next slide.
Real quick, Linz, I would say from a rainmaker's perspective, guys, one of the things that I would challenge you with is dialing into your team multi-year trends. And the data and insights that you can get through reflection, now that I think about this, as it relates to how do we reflect on Q1, where it is that we are and where it is that we're going, and are you paying attention to the data, insights, and trends that your multi-year trends can provide to you? I know many, many, many people lose track of their data. And this data is vital for you to have a North Star as to where it is that you are and where it is that you desire to go so that you can effectively make changes throughout the year. And the multi-year trends is a great tool in order to do so.
Yeah, so here's just an example of what some of those reports are going to look like. So not only can you view these, but you can filter, you can sort, you can even save and use custom views as you're viewing some of these reports in there. And then you can also download those reports as well. So just a note sorry, I'm echoing. So after April 23rd, these reports will no longer be in my kw.kw.com. They will live exclusively in Command. So right now they're in both places, but just moving forward after the 23rd, those 3 reports will live exclusively in Command after that date. All right. And then the last couple tech and marketing trainings this month, this Thursday, we're going to be going through landing pages in Command. So this is a great tool to utilize if you want to create single property landing pages or, holding client events and you want an RSVP page. There's a lot of different ways that you can utilize landing pages. So check that out on Thursday at 11. It's on Zoom. All of those trainings are always going to be recorded and uploaded to YouTube. So if you're curious and interested in learning more about specific pieces in Command, check out that YouTube channel, check out the tech and marketing playlist, and those are all going to be in there. And then finally, usually at the end of the month, we always do compliance in Command and zip form training. So if you want to learn more about the process of creating an opportunity and what that looks like for submitting your compliance documents, check that out on the 24th. Thank you.
All right, listing network updates. Willis, do you want to give the group a little bit of a listing network updates as it relates to how these guys can get their listing reports as well as open houses?
Hi, everyone.
Willis, what do you got on the listing report and open houses?
So
all right. It is.
These computers. Hey. So the listing network updates. So I've been getting a lot of emails about features and things that you want changed about the report to make it a little more easier, to make it a little more friendly on the go, instead of getting a report every Wednesday. Now you're going to be able to just click on your phone, open up the report, and you don't need to get a report emailed to you. You'll be able to access it the exact same way that you do the broker's opens. This way also, when you're submitting all your additional things, like you can include photos, there's a lot more features that are going to be able to be done here. so that you have a more streamlined experience on the go. I know you're all super busy. I get a lot of emails literally an hour after I send the report. Hey, are you gonna send out that report yet? And it's like, some people forget that they actually accidentally unsubscribe, things like that. So instead of like me trying to figure that always out, we're going to put all those things, just housing them in the agent hub. So that way that you'll be able to get that at any time you want. And if you have a submission that needs an update, like a price change or status change from excluded to live, whatever, we can do that in real time now and update it instantly. And you'll see it exactly the moment it's approved. Instead of waiting for the next report to come out the following week, you'll be able to get that update immediately. So I think that that is something that better serves the agents, especially when you need things to be updated now instead of later, which I know a lot of you, you're about that life. So also, we're going to be adding in another feature that we're going to be highlighting open houses for all of you now. The exact same way that we do brokers opens, you'll be able to submit your information via form the exact same way that you do in the listing network. And that will be reflected on a exact same kind of format that you're already seeing with the brokers opens, things like that. And you'll be able to also get that out in the agent hub and on the go and submit your photos and all those wonderful details. And those will be coming out every Thursday morning so that we can go into the weekend knowing who's got the open houses, and that'll completely refresh and it'll be live documented just the same way that the listing report's going to be. So if you're like, oh my God, my broken or my open house has changed, or blah, 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 I can make those updates for you in real time and save you a lot of headache. So yeah, and I'll shoot this out to you all so you all see like the little update changes, but I think it's going to serve you all pretty well.
Sweet. Thanks, Willis. All right, Lieutenant Steph, you're back this week again, all around delayed status. There's some important reminders these guys need to be paying attention to as it relates to delays, because we've had a few people whose clients desired to move up their go live date, and we had some issues with that. So, Steph,
Yeah.
what do these guys need to be paying attention to?
Yes, so we will be going into those reminders, but wanted to mention this. So for those of you who pay attention to their NAR emails, I applaud you. But some of you guys have pointed this out to us and started asking questions about this. So just wanted to highlight this and bring this to the group. But so the NAR adopted a multiple listing options for sellers policy, which is something that we have always already been practicing. It's essentially they're introducing a delayed listing option out nationally. So obviously Wisconsin and the GMAR, we've been way ahead of the curve on this. I'm sure that we were consulted by the NAR when they were forming this policy. But again, delayed listing status, it's just that short time period that we are able to have our listings in the MLS while showings are suspended, and it prevents IDX syndication out to, those third-party websites, right? So again, we're all familiar with this. We need to get consent from the seller in order to do a delayed listing. Again, that is nothing new for us. But what is coming, if you want to go to the next slide, Charlie. And this will not be in effect until the end of September. So I don't want to get you guys excited and then psych you out, but the option to show homes while they are in delayed status will be coming. And this is the main question that we have been fielding the last couple of weeks on this. But the current rules around a delayed listing still apply until then. So we really want to make sure that we are paying attention and following our current rules until the MLS notifies us as it gets closer to that implementation date. So yes, Nada, I saw your comment. It is a pretty big change for us. So until then, what can you do and what can't you do? So as Charlie alluded to earlier, moving up the showing start date. So we'll start with the things we can't do. So this is something that we need to really just be aware of as listing agents and our staff who may be doing MLS entry for us. But once we pick that go live date, that showing start date, we cannot move it up. And the MLS will not work with us in order to move it up. So be mindful that when you put in that showing start date in MLS, that we have to stick to that. We can move it back, we just cannot move it up. So again, please be aware, because we don't want to have upset sellers because of that. And that rule is on that disclosure forms that sellers are signing when they agree to go into delayed status. And then another thing that we run into often is that if you enter it into MLS, there's a change that you need to make, maybe with price, maybe with information that you put in there that was entered wrong. We cannot change the status either. So once it's in delayed status and you want to withdraw it or expire it, we cannot do that until that go live date. So obviously all of this will be changing in a few months here, but I really just want to make sure that you guys are aware of this until then and are following that rule. And then to move on to what can you do for a delayed listing. So advertise the property once the start term of the contract has begun. So that means, again, yard signs are great. Go ahead and put your yard sign in. It will be in the MLS, and you'll have a link available that you can share it out to other customers or consumers. So you can search for the property in MLS under delayed status, and you can accept offers. And right now, again, that would just be a sight unseen offer. But then again, where we get some misunderstanding here is that if a sight unseen offer has been accepted, we can't show the property until that showing start date. So that means inspections, that means appraisals. We can't get around that rule just because we have accepted a sight unseen offer. All right, so it's exciting for us, obviously, and MLS will keep us up to date as we get closer to September. So good deal.
Awesome. Thanks, Steph. Guys, as always, things are changing. You're probably reading about these updates from an NAR's perspective via emails and various industry updates and news. And as always, we'll keep you up to date. A lot of these changes aren't going into effect until September, and I think that there will still be some changes locally with it. Our local MLS that I'm working on in the background, as I've kind of shared with you previously. So stay tuned and we'll make sure that you're up to date by implementation. Cool. All right. Upcoming training, education, and events. What do you guys need to be paying attention to? A couple things to point out. One, this week, Friday the 18th, the offices will be closed. Again, offices will be closed this week, Friday the 18th. Everyone's FOBs will have access to their spaces 24 hours a day, 7 days a week, 365 days a year. If you do meet with clients, we just ask that you please make sure that you clean up after you're utilizing the spaces, as the leadership teams will not be in office starting on Friday the 18th, and then we will be back in on Monday. A couple other things to point out is we've hosted 2 of these conversations around articulating your value. Last week we hosted one with Bruce and the Speranzas. Then this week we had Ethan, Janine, and Emily Fair around what is going on, picking top people's brains. What are they seeing in the market? How are they having conversations with clients? What are some of the nuggets in terms of how the business has evolved and what are they implementing and to do differently? And this Wednesday, I'll be hosting a conversation from 9 a.m. to 9:30, just 30 minutes of quick hitters with Zach, Nada, and Jesse, all around what it is that they're seeing, how they're making changes to their business, and how they're effectively navigating the market of the moment during the spring market. And then next Monday at 9 a.m., I'll be having a conversation with Brian, Will, and James all around the same thing. And we're going to continue these conversations throughout the month of April. Next up, Red Day. Registration is now open and live. As I mentioned last week, almost everything is actually sold out except for one opportunity, which is Zacharias Acres out near Oconomowoc. We have about 150 plus people that have registered for Red Day. Red Day stands for Renew, Energize, and Donate, to give where we live within the communities that give and provide for us so much. So sign up for Red Day for May 8th. The day before, on May 7th, we'll be hosting Mark King, the former president of Keller Williams International, who will be coming in to talk all around wealth building downtown at the War Memorial, May 7th. It'll be all around how do you maximize your tax strategies as being a 1099 independent contractor? How do you accumulate capital with the business that you've built? And how do you deploy capital in order to build generational wealth? What does investing in real estate look like? How do you do it and maximize the potential to it? And all sorts of things. It is all around wealth building. It is not around building your business to create the wealth. It's all around, once you've built a big business, what do you do with the capital that you have in order to create long-term sustained wealth? And that will be on May 7th downtown at the War Memorial. Lastly, Mega Agent Camp is coming up. It's not average camp, it's Mega Camp. Mega Camp's format is this. You sit in a room with top people, and they pick their brains around what makes them incredibly successful. And at the end of the conversation, KW puts out a one-pager around their models and systems of what makes them unique within their markets in order to create scale. It's not average camp, it's Mega Camp, August 11th through the 14th. Feel free to register today. All right, lessons in the market of the moment. Okay, I went in, did a deep dive into Q1 as to what's going on in the market to give you guys some perspective as to what we're seeing and what is the data telling us based on the insights and trends, and how do you effectively take advantage of those insights and trends to be the economist of choice for your clients. So last week, I came back from spring break and I gave the group a reminder all around focusing on the controllables. There's so much going on within our daily lives that are outside of our control. Lawsuits, competitors, interest rates, capital markets, clear cooperation, policies, politics, and everything in between, right? Those are things we can't control. What we can control is follow up, do a great job, and build relationships, okay? You have to focus on the controllable in environments where there's so much uncertainty and people are coming to you for certainty as it relates to what is going on with their largest financial assets on their balance sheet. And the way in which that you deliver that sense of calm and confidence and how you focus on your relationships and being the economist of choice for your clients is ultimately what can create your success. Being the economist that pontificates on what might happen in the macroeconomic environment based on this, that, and the other is quite frankly irrelevant. They're coming to you to be the calming voice as it relates to their largest financial assets, to give them the insights as to what's going on as it relates to their real estate. So what are those insights and how do we break it down? As a reminder, all the slides will be available to you on the Agent Hub through kwrealtymke.com, right? So you can pull those down and utilize them for any of your presentations. Feel free to share whatever you might need. And also, as a reminder, I give you all the graphs and data to make sure that you know that I'm doing all the research. And then what I will do at the end is give you the grocery store market of the moment script to help you articulate and boil this down to say, when someone walks into you into the grocery store, how do I then translate or communicate this information to someone as to what's going on? So I want to share with you something I've shared before, okay? And it all stems from the standpoint of what is the mortgage rates and the rate breakdown of current homeowners across the US. Okay. And the reason this is important is last week on Wednesday in the first Articulating Your Value conversation, Bruce Gallagher gave a really interesting insight and nugget. And it wasn't so much of interesting as it was around how he was helping create a sense of calm for his clients during a moment of uncertainty. Because if you recall, the previous Thursday, Friday, and Monday, there was a lot of uncertainty as to what was going on within the capital markets and a lot of clients paying attention to their 401ks, their stock portfolios, so on and so forth. And Bruce brought a great nugget to the table that talked around how he flipped the conversation to talk about the equity that people were having and how do you unlock the equity in the event that you need liquidity and you don't want to touch your stock portfolio, because we know that time in the market beats timing the market. And so the way you mitigate a major downturn is by giving it time, because every market corrects itself over time. And yet there are clients that need liquidity. How do they access that liquidity? Through the equity they've built within their home. And so when you think about this, the challenge that we've been facing from an inventory perspective is 74% of mortgages across the US right now are 5% of less. Yet 38% of those homes are mortgage free and 76% of homes have more than 50% equity. So in a situation where you have a client that is considering, oh my gosh, I need to access liquidity, I need to access equity, I need to think about these things, and yet at the same time, there's a lot of uncertainty in the capital markets, and I don't really want to take a bath based on what's happened in the last 4 to 5 days. What do I need to do? And it's we exist to bring perspective in order to help people understand, to provide them options. Provide them options. So it's educate in order to create inventory. So what are we seeing within the first quarter of the year so far in 2025? Total inventory units here. I'm going to focus on this here for a second to help you understand as we go through this data, what it is that I looked at. So I pulled this data this week as it relates to Q1 of 2025. What happened January, February, and March, and how does that compare to the January, February, and March, the quarter one of 2022, 2023, and 2024? to give you a 3-year perspective about where we are and where I think the market is going. So in Q1 of 2025, there were roughly 9,000 units that were for sale. Now, mind you, 21 and 22 were effectively the apex of the residential real estate market. So I gave you 22 to say, how far off are we from the apex of the market? And then how are we doing versus the last 2 years, knowing that the last 2 years, we're coming out of the last 2 years and where it is that we're going. So total inventory, interestingly enough, for those of you that operated your businesses in 21 and 22, we're operating in a similar environment from the standpoint of total inventory still remains relatively suppressed. It's down 9% versus Q1 of 22. However, it's up 9% versus Q1 of 23 and up 2% versus Q1 of 24. The reason why I share that perspective is yes, it's gone backwards and we saw a significant drop from 22 and 21, and yet we're starting to see the slow climb that I've talked about over the last several months, that we're going to come out of this and we're starting to come out of this, and yet it's going to take some time and it's going to be slow. It's not going to be an immediate bounce back or a hockey stick type curve, okay? New inventory units, this is total new inventory that's coming to the market in Q1 of 2025. There were 5,725 new units that came to the marketplace, okay? The reason why I share with you the 5,725 is it's important to remain in perspective as it relates to what that number means for your goals. Most of you, the majority of the industry, is trying to take 4, 10, 20 of those units, 50 of those units, 100 of those units. Well, even if you took 100 listings, there were still 5,700 available listings that you or your team did not get. And so the market is still providing you access to opportunity. The question is whether you are taking advantage of the opportunity. Now, how does that look going back? Versus Q1 of 22, the market's down 15%, or we lost about 1,000 units. And yet Q1 of 2023 is when we really saw the bottom of the market, and we're up versus 11% versus the bottom. And you can see we're slowly climbing out of that bottom. We were up 3% versus Q1 of 24. Again, growth is positive based off of what happened in 23. 23 was the free fall. Okay, our market was down so substantially, and now we're slowly climbing out of that hole. Expired inventory units, I've talked a lot about this over the last year, and I'm doing it because I'm trying to beat it into your guys' head from the standpoint of 2 things. One, we have to, when we have the opportunity to go into a listing appointment, make sure that our pencils are sharp, we're giving accurate advice, and we are telling people not always what they want to hear, but what they need to hear. Okay? And the way I know that some agents are not telling people what they need to hear and they're telling their clients what they want to hear is expired listings are up significantly. And so a lack of appropriate communication with our sellers is what is leading to unrealized expectations, and people are getting canceled. That's the first warning. The second opportunity in it is there's so much increased level of expired listing inventory. There's an opportunity to be second place in the market and to diversify how it is that you take listings within the market, because you might not have ever focused on expired listings before, and yet there's a lot of opportunity. In Q1, sorry, when we look at, and I apologize, I have to update that number because I just carried it over from a previous slide, but Q1 of 20 versus 22, it's up 40%. Q1 versus 23, it's up 42%. And Q1 versus last year Q1, it's up 15%. Okay? Be careful. Be honest, be forward, be transparent in your listing presentations about what it is that you can do and what you will deliver for them. And yet sometimes we have to challenge our clients as it relates to what their expectations are in order to deliver an appropriate experience. Otherwise, we are seeing listing agents are getting the hook faster than we've ever seen it before, and there's an opportunity to be second place in the market. Sales absorption rates. So this is the percentage of demand, as a percentage of demand that's gone under contract within the marketplace. In Q1, almost 50% of all inventory went under contract in Q1. And you can see last year in Q1, it was 51%. Q1 of 2023 was 51%. So while it hasn't grown substantially, we're kind of operating in this demand cycle that yet I say it's gotten a little bit stagnant because we haven't seen the pop, which is what's leading to this slow rebuild. And yet we're not significantly off. we're just operating in an environment where the demand has remained healthy. We haven't seen a fall off, but we haven't seen a pop. It's just going to continue to grow slowly and slowly and slowly over time. Average days on market. This is interesting because I coming out of a conversation I had with the Innovation ALC yesterday, and there was some commentary around some anxiety around listings and listing sitting. It's important to remember, guys, the average days on market in Q1 for 2025 was 39 days on market. Now, when you look at Q1 of 2024, the average days on market, 39 days on market. Q1 of 2023, 35 days on market. Q1 of 2022, 38 days on market. What is my message in this? This is effectively communicating expectations with our listing clients. Homes going off the market in 12 to 24 to 48 hours is actually not the average. The average is right around 35 to 40 days. Okay. And level setting expectations in terms of the velocity and pace of market is important. I also think this is part of the reason why some listing agents are seeing more expired listings, right? And understanding of the velocity and the pace in which that inventory is coming off the market is important. 39 days on market is the average for Q1, and you can see that is operating at a very similar pace that we've operated at over the last 3 years within Q1. Units going under contract, you can see in Q1 of 2025, again, perspective as it relates to your goals and what you're trying to achieve, there were 4,400 units that went under contract in southeastern Wisconsin in Q1 of 2025. When you consider that versus the peak of 21, 22, it's down roughly 1,300 units. So 1,300 units evaporated from the marketplace, or down 23%. Yet it's up 4% versus the absolute bottom, and down slightly in Q1 of 2024. Again, I go back to my synopsis that the market is rebuilding. It's just going to be a slow burn or a slow rebuild. Okay. Now, a lot of this has to do with just rapid rise of interest rates, a slowing increase of new inventory levels, and you can't sell homes if new inventory doesn't come to the market. So a little bit of this is this horse trading as it relates to how things are happening. But if you look at it, Q1 of 24, there was an increase of only 152 new units that came to the market, and we were only off by 100 units. So the delta there is 200 units in an environment where there was 5,000 units that sold. Okay. It's, not the end of the world. And just, again, things that I'm starting to see that we are rebuilding. It's just a slow rebuild, not a hockey stick rebuild. So what does this mean on pricing? And this is probably the most interesting slide for you and likely how you communicate this to your clients. Okay. When we look at the average and the median, average is you take the average of all home sales through Q1 of these variety of years, and you look at the median, which is the middle point of this homes that have sold within these various quarters throughout the last 3 years. When you look at it, Q1 of 2025, the average was 365,000 in southeastern Wisconsin. That's up 26% since 2022. It's up 15% versus 2023, and it is up 11% versus Q1 of last year. Prices are appreciating again at double-digit growth. Last fall, I had some concern because we saw a lot of price changes. We had seeing some slowing of appreciation within the southeastern Wisconsin market. And nationally, you're hearing a lot of stories around Phoenix and Austin and Florida of really slowing appreciation gains. That's not the case in southeastern Wisconsin. When you look at the median, which is much more of the middle point within the market, the median in Q1 of 2025 was 307,000. That's up almost 30% versus 2022. It's up 18% versus 2023, and it's up 12% versus first quarter of last year. Again, double-digit appreciation. And then I looked at it as a price per square foot, and you can see very similarly appreciation gains versus over the same first quarter of the last 3 years. So I share that with you all to say the market's rebuilding. We're slowly getting there. The first quarter has come to an end. We are now entering the era of the apex of the market for 2025. And that era is in the next 90 days. 90 days from now is right around the 4th of July. The peak of the market peaks around the 4th of July, and you need to be thinking about how am I articulating this to my clients in order to maximize my opportunity within the apex of the market. So updated data for you as it relates to what's winning within the market. And I pulled the variety of different metrics that we've looked at across the variety of different deals. And then I gave you the perspective as to what was going on in April and May of last year, as well as July of last year, just across those variety of metrics. And how is that parlaying to what is going on so far in 2025? So when you look January and February, here's where you can see the results. I've shared these with you many times before, and what happened in March. So in March, I reviewed 298 accepted offers with an average price point of $419,000. A couple things to point out, which I highlighted for you. One, the list price to accepted offer ratio has jumped to 103%. So the market has gotten more competitive. People are paying above list price. That is happening, and the data is telling us that. Interestingly, when you look back into January and February, January was below list price. February was effectively right at list price. March now has gotten above list price and shows you the competitiveness of the spring market. Another interesting fact that I've been paying attention to versus spring and summer of last year is we're now starting to see clients utilize the lever of waiving inspections. Okay, and the incidence of clients of waiving inspections, not that I'm advocating for that, I'm just telling you what the data is telling us, is that in February, almost 60% of all transactions utilize the mechanism of a inspection. In March, that dipped to 54%, and I'll be interesting to see how that shows up in April as the market gets more competitive. The one thing that has correct. One thing to point out too, where we've seen a significant fall off in terms of the utilization, is appraisal gaps. Only 2% of all deals utilized an appraisal gap. And so what that's telling me is it's not as necessary within the transaction as much. And part of it is because the price appreciation gains that the data is being provided to appraisers, and that gap is becoming less and less of a concern for buyers, is basically what I'm reading through the data. So the grocery store script, what's going on in the market at the moment when you stop into Pick and Save, Quick Trip, Piggly Wiggly, or Sendix, and you're getting a gallon of milk and someone says, hey, what's going on in the market? Here's how I would summarize or boil all that data down. What's going on with demand? Demand has remained consistent. There's no real major changes. It's not in fuego, but it hasn't slowed. We're basically just operating how we have been the last 3 years, and buyers are still very much circulating. The market is still competitive. It's very healthy from a demand standpoint. Inventory has relatively been the same too. Okay, there's been no major pop alleviating the shortage of inventory, and potential sellers are sitting due to the rate environment, as 78% of homeowners in the US right now have less than a 5% rate. So the inventory issue that we're facing is sellers are just sitting. Okay. Now, the rate of sale and velocity, homes are moving at similar rates that we've seen in the last 3 years. 39 days on market was the average, and yet expireds have increased pace because sellers are getting impatient. The key from an agent's perspective, and these are my reminders to you, are set expectations, communicate, and price appropriately. So what to expect? It's going to be another competitive spring market. Healthy demand plus slowed new inventory coming to the market will continue to drive price appreciation up of residential real estate. We're up roughly 10% in Q1 and up 25% since Q1 of 2022. We'll continue to see rising appreciation, which is good for sellers, and will continue to put a pressure on affordability. Don't expect an influx of inventory creating a competitive market. Be ready. Get your ducks in a row. Get your ducks in a row. So how does this parlay in terms of what's going on in the market at the moment, and where do we sit within the space? A couple things to point out. Q1 of 2025, here is the top 10 brokerage brand results by closed dollar volume so far in 2025. Kudos to you guys. Your level of productivity has increased our market share position within the market almost pretty substantially. Last year, we finished number 1, just slightly ahead of number 2. But you can see through the first quarter of the year, the level of productivity of this group and how we have challenged you heading into the first quarter has shown up in the results, and has shown up, quite frankly, in your incomes. And incredibly, incredibly proud. of this group. Here, this is a rolling 12-month trend line, so you can see just trend lines based on brokerage brand. You can see where a variety of brands sit, and you can also see a separation starting to happen. And again, I share this with you as a kudos to this group in terms of your level of professionalism and productivity. Like, you are absolutely putting in the effort, the activities, you're remaining consistent and stable within your practices, and it's showing up in your results because our results are a reflection of your results. I get this asked a lot within the luxury space. This is an even more crazy statistic. January through March of this year, Keller Williams in southeastern Wisconsin has sold one in every four luxury homes within the market. We have increased our market share presence by 20% within the luxury space, and we are selling homes 40% faster in terms of the velocity and rate of sale. Again, this is absolutely a reflection of your guys' business. And then when you look at it and overlay it over a 12-month period and look at the trends, I like seeing separation from the pack, separation from our peers, but it also shows you that you're in a part of an incredibly powerful and productive community that can help you win deals, because you know your peers are winning every single day. People want to play a part of winning teams. So when I look at it in terms of the language of real estate report, we look at a variety of metrics. I talked about this last week in terms of our lag metrics and leading metrics. Let's start with the leading metrics, which is listings taken units, listings taken volume, contracts written units, and contracts written volume versus the MLS. You can see here, again, across the MLS is coming into a slow climb, a slow build. And again, I share with you the KW story in terms of the collectiveness of what this community is delivering within the market is absolutely insane. Absolutely insane. And the level of productivity is absurd. And I commend you guys for that. And it's absolutely incredible and phenomenal to see the results through the first quarter. And the reason why it gets me so excited in terms of these results is I know so many people have had such an incredible first quarter. They are on pace to exceed their goals in 2025. And you can't exceed your goals in 2025 if you don't hit your first quarter, because there's not enough volume to be made. I will also say, is a little bit of a plug, this doesn't happen by accident. These results don't happen by accident. And I give a shout out to those that participated in the fourth quarter of the BOLD program. And I always say, it delivers results. BOLD don't lie. BOLD don't lie. So shout out to those that were part of the BOLD room. And that is absolutely showing up within the data of what we're seeing through the first quarter of this year. And with that, I'll leave you there. Guys, it is 9:45 on a beautiful Tuesday in Milwaukee. All of the data and the PowerPoint presentation will be available to you on the KW Realty MKE Agent Hub. Feel free to utilize. If you have any questions, feel free to reach out. Happy to help you win. Congrats, and thank you for recognizing us as the top workplace in southeastern Wisconsin. Guys, have a great day.